Retail vs institutional investors. Retail is ruling the Indian market. While foreign institutional investors are pulling funds, Indian retail investors are keeping the sentiment high. The era of retail investors is here. The retail investors of India have finally realized the potential and importance of investing in the equity market. Retail investors and institutional investors, what is the difference? Investors are integral to the investment ecosystem. The market's direction and robustness are determined by the sentiment and active participation of these investors. Although their ultimate aim is to optimize the returns and minimize their risk, there are subtle differences between the two categories. Here we look at how different they are and how the scene in India is transforming, where retail investors are gaining more importance than institutional investors. Who is a retail investor? A retail investor buys and sells equity stocks, commodities, mutual funds, gold funds or exchange-traded funds, ETFs, via online broker firms or other investment accounts provided by licensed brokers. SEBI defines a retail investor to be an individual who applies or bids for equity stocks or other securities, the value of which does not exceed Rs. 2 lakh in an IPO. The retail investor is not allowed to hold or buy stocks of more than Rs. 2 lakh. The market regulator consistently endeavors to protect the interests of retail investors. They often maintain high entry points for riskier investment opportunities or even bar them from investing in highly risky assets. Over the years, the equity ecosystem has evolved and become a much safer place for retail investors to invest and optimize returns. Who are institutional investors? Institutional investors pool money from various investors and other entities and invest these funds across various financial securities. Some examples of institutional investors are mutual funds, insurance companies, pension funds, investment trusts, asset management companies, hedge funds, etc. There are two broad categories of institutional investors: foreign institutional investors, FIIs. FIIs are entities that pool money from numerous sources and invest in any other promising financial market apart from their local stock market. Domestic institutional investors, DIIs. DIIs are entities that pool money through various sources and invest in the local stock market. Given the growing importance of retail investors and the Indian markets maturing, evolving and being resilient to a stiff macro environment, it is time you participate in this equity investing journey.